All right, welcome back, everyone. The August job numbers are out, and take a look. The U.S. created 201,000 jobs in the month of August. The unemployment rate remains steady at 3.9%. So joining us right now is David Smith from Rockland Trust. David, good morning. Thanks for joining us here. What are the numbers? What do you see in these numbers?
So at the end of the day, they're pretty good numbers. I think the 201,000 jobs beat expectations. The expectations were about 190,000 jobs added, so 201,000 is good. What's interesting is in the details, right? So we saw a 2.9% wage increase. And the concern around that is eventually if wages are growing too rapidly, eventually that will result in inflation. So one of the things I saw quickly after the news came out was the futures market. Futures for the stock market traded down a little bit based on this news because there's concern with inflation the Fed will continue to raise interest rates, and that may not be a good thing for the economy and therefore the stock market at some point.
So you think that the rate increase is likely going into the rest of the year?
I think September is pretty well done. I mean, it's almost 100% guaranteed based on futures expectations of what's going to happen in September. Now the odds of a December increase have gone up, and I think it's very likely if the data doesn't change between now and then, you will see the Fed increase again in December.
So to you, it sounds like a plus minus. I mean, on paper, 201,000 jobs sounds good.
Yeah.
But
there are implications.
Right.
Yeah, always. Yeah.
So what does it mean to the individual investor, do you think?
Well, it depends on how you're invested, right?
Yeah.
So for the depositor, somebody who's got their money sitting in a bank in a savings account, this is good news, because typically the Fed funds rate is going to result in interest rate increases over time. If you're an investor in 100% stocks, could be bad news. As you probably know, we're in now the longest bull market in history. At some point, that's going to stop. And perhaps the news that today will cause the Fed to continue to increase rates, and eventually, if they go too far with that, the economy will slow and the stock market may trade down.
So while these numbers you're saying could have an impact on the markets, do you see any kind of outside political influences having? It doesn't seem like the markets have been insulated almost from
domestically, that's true,
right.
Jeff. Yeah, but if you look internationally, that's not true. So, for example, emerging markets now are in a correction, meaning they've corrected over 20%. And the reason for that is twofold. One, the trade discussions are impacting the local economies. The second thing is the strength of the dollar, which is largely based on what's going on from the trade rhetoric. And most of these countries have debt that's denominated in dollars, which means they have to use their foreign currency, their currency local, to pay off the debt in dollars, which is challenging for them in this dollar environment. So emerging markets are really feeling the trade rhetoric. Domestically, it seems not to have an impact, but eventually we suspect it probably will.
So safest bet for people at this point is?
Stay diversified and always remember to think long term.
All right. David Smith with Rockland Trust, thank you so much for joining us here this morning on those job numbers and the markets. Joy, let's go back.